There was a bit of a turnaround for the Chinese mainland markets today as investors started buying the dip after markets neared five-year lows. The Shanghai Composite Index advanced around 1/3%, but it remains below 2,900 points. The Shenzhen Component Index rose 1.5% and closed back above 9,000 points. The gains for the main index were capped because there's still no firm indication of upcoming policy moves. The mainland markets also managed to borrow some optimism from the Hong Kong markets, where the dip buying was stronger. Foreign inflows today on the Stock Connect had passed $1 billion before the lunchtime trading break. Much of the gains were concentrated in defense stocks and AI companies. AI developer Cloud added more than 6%, and iFlyTech rose 3.6%. Its shares were catching up with reports that the firm is going to spin off its medical technology unit and list it in Hong Kong, something iFlyTech announced yesterday, although the markets are still awaiting details of the plan. And I already mentioned Hong Kong investors were dip buying that pushed the Hang Seng Index up 1.27%. Early on in the session, the index had climbed more than 2%. The Hang Seng had declined 7 sessions in a row, that's all year. Tech stocks were among those leading today, with food delivery giant Meituan adding 5.37%. Wuxi Biologics was the star though. At one point, it was up more than 19% after saying it signed a research service agreement with BioNTech. The statement included a lot of pharmaceutical jargon, but what it boils down to is BioNTech is going to pay Wuxi Bio $20 million upfront for exclusive rights to use some of Wuxi's tech. And that amount could increase depending on the results. Over in Japan, the results were good. The Nikkei 225 index hit a fresh 34-year high, closing above 35,000 points for the first time since early 1990. Today, the index was up 1.8% and continues to be supported by a weaker yen. That's why, once again, the big winners were companies that generate a lot of income outside of Japan. Automaker Suzuki added 3.9%. And just as we've seen a shift in U.S. interest rate predictions since the new year, we're also starting to see market forecasts of Bank of Japan policy start to change. Investors had been expecting and hoping for a move away from Japan's ultra-loose monetary policy. But the latest wage data shows that Japanese pay packets shrank for the 20th straight month in November.